Smart money is actively offloading gold. My primary bias for XAUUSD remains strictly bearish this week. But here's the thing. The real opportunity is only going to appear after a massive engineered liquidity sweep. Let's get right into this explainer and look at exactly what institutions are already positioning for, because you literally cannot afford to be on the wrong side of this.
I need you to burn this number into your mind, 3,950. Based on current liquidity conditions and institutional order flow, that is the ultimate destination. Institutions are meticulously engineering price action right now to target a major pool of sell-side liquidity resting at exactly 3,950. That's our primary draw on liquidity for the week. Every spike, every dip you see, it's just the machinery working to reach that exact objective.
So why is this happening? Well, just look at the macro context. Gold is down over 2% over the last week, and it's dropping because aggressive, hawkish central bank repricing is completely stripping its premium. The bond market is signaling higher real yields, and that's pushing massive institutional fund flows right out of metals and back into the US dollar. Capital is rotating, and smart money? Well, they're just following the flow.
Section 1. Institutional order flow evidence.
We aren't guessing here. We're following the footprints. Looking at the latest commitments of traders report, we need to focus on managed money. But here's what most traders are missing. Managed money is not buying these dips. Instead, they're executing aggressive long liquidations. They are systematically using minor intraday relief rallies, those little spikes retail traders think are market bottoms, to liquidate their net long exposure. They are literally dumping their bags on unsuspecting retail buyers.
The takeaway here, smart money intent, is pure distribution right now. They are distributing heavily into any minor upward retracement. There is absolutely zero accumulation divergence present in the data. When you see funds acting like this, it just completely validates that they are engineering prices lower. It perfectly confirms our bearish bias.
Section 2. The macro catalyst map.
Now, institutions don't just sell blindly. They need massive liquidity to move their orders, and they use the economic calendar strictly as a tool for liquidity engineering. Look at this timeline. Wednesday's GBP CPI, that is a prime vehicle for a midweek Judas swing, a fake move designed to trap early traders. But Thursday is the real high-impact day. We've got AUD employment data in the morning to trigger an Asia session liquidity sweep, followed by the massive ECB rate decision. Institutions will absolutely use that ECB volatility to cause a deep repricing, violently cleaning out late-stage breakout sellers before continuing that final draw lower.
Section 3. The retail trader trap.
This is where most retail traders make it trapped, providing the exact counterparty liquidity institutions need this week. Look at this comparison. The retail expectation is going to be to buy the early week dip. They'll look at Monday and Tuesday's consolidation, draw a line, call it support, and hit buy. But the institutional intent, it's entirely different. Institutions are just engineering a premium rally. They want the price to push up slightly early in the week so they can initiate massive short positions at better premium prices. Retail buys the dip, smart money sells the rally.
Section 4. The XAUUSD price action map.
Let's map out the exact structural path institutions are likely following. Starting top down on the weekly chart, notice the immense void directly below current price action. There is a massive, untapped pool of sell-side liquidity resting right at that psychological 3950 level we talked about. We're talking thousands of stop losses sitting right there. It acts like a giant magnet. The institutional draw on liquidity is just undeniable here.
Zooming into the 4-hour time frame, we can actually pinpoint where this trap will likely be sprung. Right here, we have a clear H4 premium array containing a bearish fair value gap between 4,035 and 4,050. This is the exact discount to premium retracement zone where smart money is going to look to pair their institutional short orders with those retail buyers who are falling for the early week trap.
And dropping down to the 1-hour chart for our execution, the highest probability setup isn't just blindly selling the gap. We wait. We want to see price poke into that premium array during a London session Judas swing. And then we wait a clear market structure shift back to the downside. Once structure shifts on the H1, the trap is closed, and that's when we enter.
Section 5. The weekly trade plan.
Consolidating all the COT flow, the macro catalysts, and the SMC evidence, here is the definitive, actionable weekly execution plan. Our bias is strict: sell rallies. We are absolutely not buying. Our high probability entry zone is inside that H4 fair value gap between 4,035 and 4,050. As price drops, you have to pay the trader. Take partial profits at $39.90 and $39.70 to secure your capital. The final target is $39.52 for the ultimate sweep of that sell-side liquidity. And remember, keep your maximum risk strictly to 1% per setup.
The exact condition that invalidates this entire bearish bias and indicates a deeper retracement into the 4100 weekly gap is a clean daily body close above 4800.
I want to leave you with a final thought from the briefing. Most traders will focus on price, but smart money focuses on liquidity. Stop looking at arbitrary lines and start looking at where the stops are resting, because institutions are engineering this environment right now. So, the ultimate question is, are you trading the pattern, or are you becoming the liquidity? If you enjoy institutional gold analysis using ICT and smart money concepts, subscribe to ICT Market Theory. Leave a comment with your weekly gold bias, and if you'd like to follow future opportunities, you can find the trading account link in the pinned comment below. Stay disciplined out there.